Welcome to the IPO Exchange, Deloitte's new series developed to bring you the latest trends and happenings in the IPO marketplace, while engaging one-on-one conversations with industry and marketplace leaders closest to the action. My name is Nick Accordino, Accounting Advisory and Capital Markets Transactions Partner, and I'm excited to be your host as we start this journey together. Today, I'm coming to you from San Francisco, home of some of the most successful IPOs we have seen over the last decade. In a few moments, we'll welcome Previn Was, Deloitte's U.S. IPO Services Leader, to the segment for his perspective on the IPO markets and what companies looking to go public should be thinking about in today's environment. Before I kick things off with Previn, let's quickly recap some of the key market activity for the first 6 months of the year. Coming into 2025, many had high expectations for the IPO market, given a few key factors, starting with 2024's IPO market showing positive returns for the first time since 2020. Additionally, we saw the VIX settle well below 20 and market indices at or near all-time highs. Given these positive trends, signs seem to be pointing to a number of IPOs that would eclipse the last 3 years. And while the IPO market started the year red hot, things quickly took a turn due to economic and other global factors. We saw the VIX exceed 40 and capital markets shuttered. However, as the second quarter of 2025 came to a close, market expectations gained momentum and the VIX stabilized back below 20. Despite all this turbulence, the first half of the year is ending on renewed optimism for the IPO market, and indices are again at or near all-time highs. Overall, the first 6 months of the year saw 101 IPOs priced, compared to only 69 in the first half of 2024. Bright spots were seen in the fintech, crypto, and insurance space. Let's quickly dive into some of the details for the first 6 months of the year. While the number of IPOs priced thus far in 2025 increased significantly, the resulting proceeds of $15.5 billion lagged behind 2024 by over $1 billion, as this year's IPOs were driven by small cap companies. In addition, the average deal size thus far has been 34% lower compared to the prior year. Technology has led the way in value with almost 30% of the proceeds, despite software continuing to remain sleepy with only 4 IPOs priced. Coming in a close second, the financial services industry with 20%. Fintech IPOs and insurance companies drove the financial segment by contributing $2.7 billion in the second quarter. 3 of the 4 largest deals this quarter were fintechs, including an IPO for a stablecoin issuer. Venture capital-backed deals flourished, with Q2 being the best quarter since 2021, thanks to the fintech space. Interestingly, for the first time since 2011, we saw no VC-backed biotechs. Another very interesting trend we saw this year was the return of the SPAC. That's right, it appears that SPAC IPOs are back. These blank check companies saw significant activity in the first half of the year, with 63 IPOs raising over $11 billion, compared to only 16 transactions in the first half of last year. What remains to be seen now is how fast the de-SPACs will follow. So, with all that in mind, what should we be thinking about for the next few months? Despite lingering uncertainty surrounding geopolitics and economic conditions, the IPO window is currently open for many sectors, and we anticipate a robust market for the second half of 2025. Looking ahead to the remainder of the year, the industrials, technology, and consumer discretionary sectors are leading the way in the active IPO pipeline. The next opportunity many prospects will be looking to is the beginning of September. All right, you've heard enough from me. Let's have Previn join us and add some color to all we just covered. Previn, welcome to the first episode of the IPO Exchange. Thanks so much for being here, man.
Absolutely, happy to be here.
Let's dive right in.
Let's do it.
You've been around the IPO market for a long time. You experienced the highs and the lows along the way. What's your reaction to how things have played out for the first half of 2025?
I think the first half of 25 was kind of an interesting 6 months, right? There was quite a few assets got out there and were remarkably successful, actually, despite the fact that there was some, economic volatility and geopolitical issues going on. I must say, coming into 25, on the backs of 23 and 24, I was very, very hopeful that 25 was going to be a big year. There was a kind of a sputtering of, start and go in 23 and 24, where some companies got out. They did actually end up doing fairly well, but the market never actually opened up in 23 and 24, so to speak. Given the backlog and the invest appetite, I really thought that 25 was going to end up being a really good year, but a couple of companies did get out. They did really well, and so I'm somewhat excited about what lays ahead.
Yeah, speaking of what lays ahead, some of those companies 6, 8, 12, 18 months out potentially, and we hear a lot of companies saying that, right?
Yeah.
When you think about that's a long journey.
Of course.
Sitting here today, what should those companies be doing to make sure they are ready whenever their opportunity comes?
Sure. So I think of kind of being a public company readiness in two buckets, right? There's the must-haves in order to be a good, fundamentally strong company and operationally strong. So I think of kind of the close process. Can you close your books in, let's say 7 to 10 days? How accurate are your forecasts? Can you hit your forecasts plus or minus 5%? Do you understand what levers actually contribute to you hitting or missing your forecasts, such that, let's say you're 1 month into a quarter and you got to tweak something so that you hit your numbers? Sure. Do you truly understand that? Do you have a beat and raise model, right? A lot of times you go public and, the buy side is looking for you to kind of beat whatever numbers that they have out there. And so do you have a beat and raise model that you can tweak as you, move along the journey? I think of KPIs. A lot of companies, tend to have KPIs they use with their board, with their VCs, but they don't necessarily have, kind of formal processes and controls around them to make sure that those numbers are accurate. And they often sit outside of the ERP system, right? They're sitting in Excel spreadsheets or data lake houses. Making sure you have some rigor around that such that those numbers are accurate and they can be produced timely. Because once you go public, kind of 30 days after you go public, you have an earnings release and you tend to have to update your KPIs. Yep. And finally, do a mock close, mock review, mock earnings call, ask your board to ask you some tough questions that you might anticipate getting from the investing public and see how you answer them and kind of get that all ironed out. Yeah. So those are kind of things that companies can do coming into an IPO. And then, of course, if you're 6 months out, then it's, pedal to the metal, so as to speak, and you actually start investing in kind of your G&A, your headcount, and some other nice to have processes that you might not otherwise spend the money or time on.
Yep. So the no regret spend right out of the gate. Then we're going to take the must-have too after that.
Absolutely.
Last question. Based on everything we've discussed today, and I won't hold you to this, I know you don't have a crystal ball.
Yeah.
Talk to me a little bit about your outlook for the IPO markets for this next 6 months, and maybe even extend it a little bit. We've talked about some companies 6, 12, 18 months.
Yeah.
Second half of 25 and into 26, what's your outlook?
Looking into 26, I do think that 26 might be the year that the floodgates open up. I mean, there's just a long backlog of unicorn companies with high valuations. I think it's 800 or so in the U.S. at least right now. And at some point, they need to provide liquidity to their investors and their employees. And I do believe that 26 might be the year that you see kind of all industries, kind of all these late stage companies, specifically those that have kind of an AI angle to them, getting out and doing remarkably well.
That's great. Love to hear that.
No kidding. It'd be great.
Well, Previn, I think that's about it. I think we covered it.
Sure.
Again, really appreciate you being here. Our first guest on the IPO
Thanks
Exchange.
for having me.
Hopefully not your last time on the show. We really appreciate it.
Absolutely. Thank you. Thanks for having me.
And that's a wrap, our first episode. We look forward to coming to you again in future quarters. Be on the lookout for a special edition episode in September when we'll be on location for this year's IPO Symposium at the NASDAQ. Thanks again for tuning in. I look forward to seeing you on the next one.